A continuación con ustedes, cómo construir una arquitectura future-proof para Open Banking con Eyal Sivan.
Hi. I'll wait for the deck to come up. So, my name is Eyal Sivan. Many of you know me as Mr. Open Banking from my podcast of the same name. Thank you to Edgar and Cellcom for the invitation to participate in the inaugural Open Banking Townhall. I look forward to many more in beautiful Mexico City. My throat's bothering me a little bit, so hopefully we'll see how far I get. Be kind. I've got my water, so it should be okay. I'm going to talk to you today about building the optimal architecture for open banking. I talk about a lot of open banking topics. I love to talk about consumer data rights and the move to open data and really everything to do with open banking. But I don't get to talk about this all that often. So I'm really thrilled to do it again because before I was Mr. Open Banking, I was an architect at a major Canadian bank, much like many of your organizations, for 15 years. So I love talking about architecture, and I haven't gotten to do it in a while, so this is going to be fun. A technical talk, not a philosophical talk. And if you are going to start an open banking technical talk, you got to talk about APIs, right? Open banking is all about APIs. So let's talk for a minute about APIs. What is an API? API is an application programming interface, but what a lot of people don't realize is this is a unique term in IT. It's been around since the dawn of computing, and unlike many other IT terms that have sort of changed names, different names for the same ideas, APIs have been called APIs going all the way back to the 1960s. Now back then, it was just you build whatever you can build that's going to connect two systems together. Massive mainframes the size of buildings. Now, of course, as you hit the 1980s and 90s, the proliferation of computing, proliferation of systems, you ended up with lots more APIs for connecting different systems together, many proprietary, many confusing, not interoperable, and you end up with this sort of spaghetti. Then around the 1990s, something pretty cool happened. It was called service-oriented architecture. Now, I'm not going to belabor what service-oriented architecture was, but the important part was it introduced the idea of a common standard for integration in the form of XML, a common standard for the representation of data, one that no company had developed, one that wasn't proprietary, that anybody could use. And lots of other stuff like ESBs and syntactic versus semantics and stuff like that. And then in the 2000s, 2010s to be fair, these things came along. And they sort of changed everything about APIs. Suddenly, strong canonical forms based on XML were too slow and didn't really make a lot of sense. So along came JSON, and along came HTTP and RESTful APIs. So APIs have this long history, which I'm sure many of you are familiar with and live every single day. So what does this have to do with open banking? Open banking can be thought of, from a technical standpoint, as very much a continuation of that API evolution. Open banking is not partner banking, right? There are some banks out there that still to this day will say, well, I connect to lots of different partners and fintechs and stuff, so that's open banking, right? Because I'm connecting and moving data around. No, it's not. Banks have been doing partner banking based on direct B2B relationships for decades, not open banking at all. Now that second box, that represents something that happened, again, around the 2010s, depending on which bank you're talking about, and that was when banks started to launch developer portals, publicly facing developer portals with publicly facing APIs that any developer could come to and sign up and start using. This is a big step towards open banking, and some banks will say, well, I have a developer portal, and I have APIs. on that portal. So, I do open banking. No, you don't. Open banking introduces a very important difference, and that difference, similar to what XML did all those years ago, is standardization. It introduces the idea that the entire financial ecosystem, big bank, small bank, credit union, fintech, all speak to each other the same way, based on a common standard that anyone can use, that no one owns. So that when you need account information, you need transactions, it works the same for everybody. When you need to initiate a payment, it works the same for everybody. When you need to capture a customer's consent, it works the same. That is the miracle of open banking. Now, of course, it has to do with customers owning their data and consent and data rights and all that other stuff. But from a technology standpoint, this is what is so exciting, the idea of a common, open, shared standard for the secure exchange of financial data. We've heard from other speakers that you see different approaches being taken. A classic open banking question is this: regulation-led versus market-driven. Usually it's led versus driven that go with the two options, by the way. And you're seeing this approach being taken in various forms all over the world. And like Imran said, to open it up, it's kind of a non-question. At the end of the day, every market, every region is going to have to find a way that works for them, that requires a blend of regulation and market efforts. The regulators and the market will have to find a way to eventually get together for it to work. But this isn't a talk about, philosophy of open banking and market-driven versus regulatory-driven. I could do that all day, but this is a technical talk, architecture. So this question of regulatory versus market actually has a major impact on the architecture that a bank is going to implement. That's because banks have a limited amount of gas in the tank, right? You don't have all the money and all the time in the world. I mean, maybe the biggest banks do, but most of you don't. So you have to prioritize. You have to figure out, what am I going to take my limited resources and spend them on? In a regulated market, you essentially have a kind of forced march, a compliance, a ticking clock that says, you have to do this, guys. Sorry, you're going to be fined. You're going to face penalties if you don't do it. So you take the resources that you have and you focus on the APIs. Right? What did Imran say? A minimum compliance product. Right? And even if you start to look beyond compliance, it's still sort of API focused, right? Open APIs, open data. Maybe you're worried about your portal and developer experience, and you focus, of course, on complying with those common standards. All important. But that doesn't leave you a ton of gas to focus on what's happening underneath those APIs. In a market-driven environment, banks aren't in a forced march. They don't have a ticking clock. So they do what they've already been doing, which is focus on digital transformation and all the stuff that helps the mechanics of their internal operations work faster and work better so that they can deliver not just the surface, but an effective IT operation happening underneath that supports continuous innovation, continuous improvement, continuous delivery. That involves things like agile, consumer-driven contracts, scaling, distributed data, big data lakes, automated deployments. I'm sure you're familiar with all these things. The focus is on continuous innovation in a market-driven economy. And that's really the difference that you see in the architectures in the different regions. So you look somewhere like the US, who until recently has been a staunchly market-driven approach. The banks there focus on innovation, and that shows up in the standards efforts as well. Now, I want to be clear. I'm not saying just do one or the other. Again, it's a non-question. You need to do both. You need both standardized APIs, but you also need to support continuous innovation. This is all part of a trend that's been happening for quite some time now that you could call the platformification of banks. Banks are becoming platforms. And it doesn't matter all that much if you mean open banking, which turns into open finance and leads to bank as a platform and bank as a service, which are two sides of the same coin, all the way through to this idea of embedded finance. All banks are on a very similar journey, and I'm going to boil it down for you right now. They're trying to publish APIs, hopefully open banking APIs based on open standards, maybe some premium APIs too. And the goal of that portal is to invite developers to come and use those APIs, to grow an ecosystem of developers around their portal so that they can embed their banking capabilities into all sorts of different digital experiences, some of which might have absolutely nothing to do with banking per se. And that is what has come to be called embedded finance or embedded banking or ambient banking. Goes by many terms. But the idea is to extend your reach, right? To be able to get to places that aren't within your channels, to break down the walls of the bank and let all of those banking services be free, be open, be out there. So when you're on this strategy, when you're doing embedded finance, your API portals become a channel, sort of like your branches or your online banking. And your APIs in those portals become your products. So banks love saying APIs are products. It's very, very de rigueur. It's been that way for a while, right? Treat APIs like products, fund them like products. It's true, you should do that. But not that many banks are willing to address the real challenge. So if you accept that your portal is a channel and your APIs are products, well then what is the single most important customer segment as we move into the 21st century? The answer must come back, developers. Developers are your new most important customers. They are the kingmakers. They are the ones who decide which banking products are going to succeed and which ones are going to fail, based on how easy or hard it is for them to take your banking capabilities and add it to the things that they are building. So treating them like real customers, the way you would treat someone who's looking for a credit card or looking for a mortgage, is the key to success in this world. Here's the thing, though. Dealing with developers introduces its own challenges. You're trying to drive platform adoption, right? You're turning your bank into a platform. You're trying to get developers to build an ecosystem around that platform. The thing is, those developers are going to ask for things, okay? They're like any other customer. But they won't say, oh, I don't understand the fine print. Can I get a better rate on my credit card? They're going to say, hey, can you add this additional field to this API? Can you improve the response time? How about a new API that provides such and such data? So you're going to have to deal with these requests coming in from developers, which means that the more adoption that you gain, the more complexity that's going to drive within your platform. And that's why being able to deal with that bottom half of the iceberg, what's happening inside your bank, is so crucial. I've seen real-world examples of banks that rush to market with a developer portal and really cool APIs, and then developers started asking for things, and they didn't know how to deal with them. They didn't have a support mechanism. They didn't have a shop in-house that could deliver on what those developers were asking for. And guess what happens? Eventually, those developers start bad-mouthing you on the portal that you're paying for. So being able to deal with the complexity that's going to inevitably come with platform adoption is fundamental to success, not just for open banking, but as I'll discuss, for digital transformation as a whole. So you might be thinking, do my APIs support innovation? Right? Even if I have open banking APIs, do they support innovation? Well, asking that question requires zooming in on an old friend of mine, probably one that all of you have to deal with on a daily basis, and that's your API gateway. Okay, all your APIs are passing through some form of API gateway. Most architectures for a long, long time have some form of a centralized API gateway. That means you're running some, could be load balanced and clustered and whatever, but it's some sort of single piece of software that all your systems are sort of running into in some way, shape, or form, and then that thing is publishing APIs on the other side. That's a strategy I like to call the magic black box. Okay? Today, it predominantly goes by this term sort of API management. But that same idea has been around for a long time, and it's gone through different names. It used to be called Service Bus. Before that, it was called EAI. Before that, it was called ERP. It goes way, way back. And the idea is always the same. It's basically take all your systems, plug them into this magic box, and I'm just going to take care of all your troubles for you and publish APIs on the other side. It doesn't work. The magic black box is a lie. It doesn't matter which name it went under. What you inevitably end up with, and I lived this, is a proprietary bowl of spaghetti that you will now have to hire specialized, expensive resources to manage, usually from the vendor who sold you the thing. And after you spend $10 million putting it in, you're going to spend $10 million taking it out because it's slow, it doesn't work, it can't support the speed that you need to drive continuous innovation. Now, as you move towards SOA, this box got sort of skinnier and skinnier, but still, this idea of the big bow tie, you'll recognize the diagram. It's always the same. Bunch of inputs go into a central magic black box, and then a bunch of outputs sort of fan out, so you end up with this bow tie. It doesn't work. Smart technology companies have realized it doesn't work, so they've moved to a new kind of architecture known as microservices. Now, microservices take care of the gateway problem in a different way. They essentially break down your systems into lots of different smaller parts. I'm going to explore what microservices are and what makes them unique. Now, the first thing to understand is that APIs and microservices are not the same thing. People conflate them all the time. They think, oh, well, I have APIs and they're like fine-grained APIs, so therefore I'm doing microservices. That's not what microservices are. APIs are the contract. They essentially are a specification that define what data comes in and what data goes out. That's all an API ever was, and that's all it ever will be. It is not an implementation. It is not the system. It's the contract. It's the agreement on how the thing is going to behave in terms of input data and output data. Microservices are the implementation. Microservices say, instead of having large monolithic applications, you're going to take those applications and break them down into small parts. Now, why would you want to do that? Let's say that developers are coming to you and they say, look, that one API, I need you to add an extra field to it. Or that other API, I need to call it like 1,000 times more than I usually call it because it's Black Friday. If you have a monolithic application, you're stuck. If those APIs have a 40-year-old mainframe underneath, then how fast are you going to be able to deliver on those developers' requests? Well, as fast as the release cycle for your large monolithic system. If that's a mainframe, that could be what? Once a year? Once every 2 years? Maybe never? So suddenly, you have angry developers, even if your APIs are great, by the way. Now, what happens in a microservices environment? You've broken the problem down. You've essentially said, I'm taking all of these APIs and I'm giving them each their own tiny little implementation. So what does that mean? What does a gateway do? A gateway takes care of, in technical terms, what you would call cross-cutting concerns. So common things that all your applications need to be able to handle, like circuit breakers, security, logging, and so on. Things that you don't want a developer to build separately every time. The gateway sort of takes care of this for them, as well as routing rules and so on. So what microservices says is, well, what if we, instead of having one big gateway, we had lots and lots of little gateways, and each function, each application, if you like, has its own little lightweight gateway. And underneath that little lightweight gateway, you're going to write a small application that does just that one job. And you're going to put it in a container, and it's going to be Kubernetes friendly and so on. The specifics don't matter. The idea is you've got essentially a tiny application that services just that one API. Now, our example of the developers asking for things. Now, when a developer says add one additional field to that API, you can change just that one microservice without touching any of the others. Let's say they want one to scale up. You can scale up that one without touching any of the others. So if you've taken a monolithic application that does 10 things and broken it into 10 microservices, you can adjust each one at a time without touching the other 9. That's the power of microservices, and that's what suddenly frees you up to start to deliver faster and service the developers who are going to come in and start adopting your platform. I don't have a timer, so I don't know how I'm doing. I'm just gonna keep going. So this idea of microservices has been around for a while now. It's worth noting that it progresses as well, right? Microservices, like all enterprise architecture and software technologies, they don't stand still. Quite a while ago now, you saw this progression from monolithic gateways towards microservices. But even the beginning of microservices took a library-based approach. So probably the most popular, and I'm sure some of you are familiar with it, is Spring Boot. Spring Boot is quite old now. It's got a lot of sort of baggage, but it was fundamentally this idea of creating a framework, what some people call a microservice chassis, that allows you to deploy cross-cutting concerns through a common library to a whole bunch of different code bases. So you don't need a centralized gateway handling a lot of these cross-cutting concerns. You've got the library taking care of it, and you build into your deployment process the ability to compile your applications with this library built in, and suddenly you've got microservices. You don't have to depend on the gateway to handle these things. Spring Boot or something more modern like Finagle or Dropwizard is taking care of that for you. The thing is, libraries have their own problems. You have to maintain versioning. You have to make sure that all of your CI/CD processes are up to date with the latest version of the library, and they're sort of just a management nightmare. You don't have the proprietary bowl of spaghetti that you did with a monolithic gateway, but you have other things that are causing constraints and slowing you down. So a while back, Lyft, of all places, yeah, the ride-sharing guys, came up with an idea. They came up with something called a service mesh. And when the likes of Google and others saw what they had done, they went, wow, that's pretty cool. The idea of a service mesh, which I'll get into in more detail in the next slide, is essentially, instead of using libraries, use a tiny gateway that's separate from the application that you can update and deploy to, independent of the application underneath. So suddenly you can kind of have your cake and eat it too. You don't have a centralized gateway. You've got something that's handling cross-cutting concerns, but it's not within the small microservice application that you need to compile. So you can update it and manage it independent of the application underneath. Now, mind you, microservices architecture doesn't stop there. It's gone even beyond into serverless and function as a service, where you're essentially calling cloud-based independent functions directly off of things like Lambda, and there's other options out there. But frankly, that's pretty futuristic, and it's also very utility-oriented. It's difficult to build custom applications that do exactly what you need them to do using pure function as a service. Function as a service you're usually using more for utility-based things that you don't want to code yourself, so you get your cloud service to do it for you. The one that really fits open banking very well is service mesh. But before I leave this slide, I want to emphasize what this trend represents. Oh, okay, I can make it. It represents this idea of batch size reduction. Okay, batch size reduction essentially means that instead of having large monolithic releases, you have lots and lots of small releases. A term you'll hear in the CI/CD community is release taxis instead of release trains. Okay, that's what you are kind of going for. Instead of 2 or 3 or 4 releases a year for your monolith, you're doing like, I mean, if you look at someone like Google, you're doing like 15 a day. Now, you don't have to be Google, but the idea is to put in the machinery to be able to do rapid, continuous releases, because that's what frees you up to do rapid, continuous innovation. More and more moving parts. That's essentially what you end up with. And yeah, you've got to manage those moving parts, and there's lots of good ways to do that. So I promised you the optimal architecture. I want to stress that I use the word optimal, not perfect, not great, not future-proof. You'll pardon the note in the agenda that said future-proof. Nothing is truly future-proof, but this is as close as you can get for now. So let's take a look at what a service mesh is. You've still got your perimeter gateway. It's worth mentioning this is something that's happening internally. You've still got something that's sort of separating the outer network from your inner network. But internally, you essentially have lots and lots of microservices that each are accompanied by what's called a sidecar. That's the small cyan box. The sidecar essentially is the tiny gateway that is going to be responsible for just that one microservice. In a service mesh like Istio, the sidecars are called Envoy sidecars. And essentially, all of these Envoy sidecars are communicating with a control plane that's managing sort of the communication between them. But it's not acting like a gateway, because all it's really doing is just kind of monitoring their status, right? Like a control plane, if some of you are network nerds, it's the same idea as a network, a physical control plane. The key thing you're going for is that your traffic between your microservices travels east-west. You don't treat east-west traffic between microservices talking to each other the same way that you would treat something going to your perimeter, which is north-south. A monolithic architecture, what you end up with is, even though you've got small pieces that are, small functions that are trying to coordinate with each other, they end up going north to the big fat gateway and then back down south to another microservice. So if you have built it that way, even if you've gone to the trouble of decomposing your application, it just won't perform, because all of the traffic has to go north to the big gateway and then back down again. So what you're going for is east-west traffic, microservice to microservice, being coordinated by a control plane who's essentially monitoring health. Istio is probably the most popular open source gateway. Red Hat has caught up with what they call their Red Hat Service Mesh, but there are other options out there as well. This architecture is a great fit for open banking because it does solve that innovation problem. It allows you to have control and visibility over your applications while still supporting speed and innovation. Now, in terms of the red boxes, you might use a methodology like domain-driven design to define your APIs and exactly with boundaries between the microservices, and there's lots of great literature about that as well. The point is that I'm not inventing this stuff. It exists, and it's a great fit for how you're trying to create a more efficient, more innovative shop internally at your banks. So is the right architecture enough? Right, after all, the wave is coming. You heard from Imran, there's a kind of inevitability to open banking. And you don't just have to deal with developer demands who are coming in and adopting your platform. You're going to have to deal with standards volatility, evolving security methods, which are quite complex, in some cases involving things like consent that are probably entirely new to you. Interoperability issues, so maybe you've implemented something differently than somebody else in the ecosystem and you've introduced some opinions into there. And ongoing maintenance. As the standards change, you're going to have to change with them. This isn't a one-time compliance build like Y2K. Standards change, and they change rapidly. In Brazil, we saw the standard change 20 times in a single year. Open banking is not a one-time thing. It's a continuous thing. Expect this to be a journey. Expect it to be a rough journey. I love this picture as a representation of that. It's, of course, the great wave off of Ikugawa by Hokusai. It's famous for its fractal representation of waves, which means waves within waves within waves. Open banking comes with problems within problems within problems. This is normal. This is how it's going to go. It's not going to be clear, smooth waters. It's going to be confusing and unpredictable and difficult. That's okay. That's how it's supposed to be. Like Imran said, you have to start somewhere and you go from there. There is no denying that this wave is coming, so you may as well get started. So although it will be a challenge, preparing for this challenge will actually harden your organizations to be ready for the digital world in general. It will muscle up your digital transformation strategies, and it will get you ready for what is the beginning of a much larger trend, not just open banking, but open finance, and eventually open data, essentially the digital future. To get there, you have to become the bank of the future. Now, it's worth noting that this is both a technological and cultural balancing act. These pillars, they make up sort of your technology stack, and you have to do all of them in lockstep. Because if you miss on one of these four, then it's just going to drag down the other three. So let's take a quick look at that. Let's say you do all of them except APIs. You can deploy microservices, and you have a cloud, and you've got DevOps. Well, your developers are just going to write their own terrible bottom-up APIs. They're going to be awful, they're going to be reflective of what's in the code, and nobody's going to want to use them. Let's say you've got all three, but you don't do Agile. You might have very nice APIs and DevOps and cloud, but you don't have a good way to actually capture from the business the requirements that drive those APIs. So you're just going to be creating beautiful APIs for nobody, and your stakeholders won't know what they are or why they paid for them. Let's say you do all three except DevOps. Well, that's an easy one. You're just going to not be able to deploy your code because you're going to hit deployment constraints. You're just going to get stuck with ops telling you, well, sorry guys, wait 3 months. And if you do all of them except cloud, you're just going to get stuck trying to run your amazing new DevOps processes against horrible legacy infrastructure that has no idea how to actually deploy a container or how to scale your systems to support microservices as they grow. Now, it's worth noting, even if you nail those four, you still need the organizational structure that understands how to structure things like two-pizza teams who can work effectively, doesn't overburden them, can work in an agile fashion, can apply domain-driven design. And fundamentally, you need corporate values, culture, and leadership that prizes continuous innovation above all else, that understands that you are on a journey to become a technology platform, that is the journey that all banks are on. To succeed at this, fundamentally, you have to support the idea that your organization is going to have to continuously change and innovate. There's something sort of fascinating happening in the world of software, and that's the metaphors are changing. When I was a lot younger, software metaphors for architecture were like architecture, right? It was buildings and sewage systems and bridges. Because, when you build a bridge, you better get the specification right up front, because if you don't, the bridge is going to collapse. That's going to be terrible. So that translated into software, and software engineers for a long time thought, the spec's got to be perfect. Don't write any code unless the spec is perfect. It's not very fast. So what's happening now is the metaphors are changing into organic systems, ever-changing systems, biological systems. And that's leading to a very different view of software, where you build and then you let it break and then you fix it again and you build again and you let it evolve. Systems that evolve are the only way to support this idea of continuous change. I love this quote from Martin Fowler. He's the godfather of microservices. There is no design at the beginning. You begin by coding a small amount of functionality, adding more functionality, and letting the design shift and shape. The organizations that embrace that idea, that embrace this concept of building for change, are the ones that are going to lead in the digital future. Being able to create systems that evolve is critical to success at open banking. If I leave you with one idea in terms of how to approach building an architecture for open banking, it's that to be open, you have to learn how to build for change. Expect it, embrace it, and build systems that can evolve. Thank you. I'm Eyal Sivan, Mr. Open Banking. And